In this video we are going to talk about Chevron. So before starting, please like this video and subscribe to our channel for future updates. Chevron, CVX, shareholders defied management by voting in favor of a proposal to cut emissions from the Dow Jones oil giant's customers. Is Chevron stock a good buy in the face of climate change? Take a peek at the CVX stock chart and earnings to find out. The fossil fuel sector experienced a seismic change on May 26. A resolution to set carbon reduction targets was backed by more than half of Chevron shareholders. Then, at ExxonMobil's XOM shareholder meeting, an activist investor won at least 2 seats. The victories came after a Dutch court determined that Royal Dutch Shell, RDSA, is partially to blame for climate change and ordered the firm to reduce carbon emissions by 45% by 2030 compared to current levels. As Chevron and the rest of the oil corporations plan their future, the victories put climate issue front and center. Chevron earnings, revenue growth falter. Earnings per share decreased 30% to 90 cents in the first quarter, despite revenues increasing nearly 5% to $31.7 billion. With revenue of $30.9 billion, Wall Street predicted 95 cents per share. Operating cash flow dropped by 10.6% to $4.2 billion. Production of oil equivalents declined 4% to 3.12 million barrels per day. Chevron also announced a 4% increase in its dividend. As COVID-19 vaccination rates rise in the United States and Europe, Chevron may face increased oil demand. However, prior to the coronavirus epidemic, the oil giant's revenue growth had slowed due to a quest for greener energy sources. According to IBD's stock checkup tool, Chevron's profits growth has averaged -16% over the last 3 years. The Dow Jones energy behemoth's revenue growth rate over the last 3 years has been 0%. Investors should look for stocks that have at least a 25% annual profits and sales growth rate. Technical analysis of the Chevron stock. After ExxonMobil, XOM, was kicked off the Dow Jones Industrial Average last year, CVX stock is the only remaining energy behemoth. The volatility in oil prices since the onset of the pandemic should be taken into account while looking at Chevron's stock chart. According to MarketSmith chart analysis, shares cleared a 112.80 purchase from a cup base on May 10 but dropped back below the pivot. Because there was little of a breakout at first, the buy point remains valid. However, shares have recently encountered resistance at the 50-day line. After peaking in mid-May, the relative strength line has sunk. The accumulation distribution rating of D implies that institutional investors are net sellers of CVX stock. Chevron stock has a 28 out of 99 IBD composite rating and a 14 EPS rating. The composite rating is based on earnings and sales growth, profit margins, return on equity, and relative price performance, among other significant fundamental and technical metrics. Stocks having a composite rating of 90 or higher should be prioritized by investors. Chevron, like other oil stocks to keep an eye on, is strongly reliant on crude oil prices. Even if Chevron's fundamentals and technicals are strong, if crude oil prices fall sharply, CVX stock will fall with them. The Organization of the Petroleum Exporting Countries, OPEC+, which includes the Organization of the Petroleum Exporting Countries and significant allies, has a big say in how oil prices move. The company began loosening output restrictions in May, with modest increases throughout the summer. Energy exchange-traded funds are another option for investors. These ETFs still have to deal with crude oil price volatility, but they don't have to worry about stock-specific risk. 2 energy-related ETFs are the Energy Select Sector SPDR Fund, XLE, and the iShares US Energy ETF, IYE. Chevron expands, but keeps spending in check. Chevron cut its long-term capital expenditures projection to $14 billion $16 billion per year through 2025 from $19 billion $22 billion before. It joined other oil companies in feeling the pinch of weaker crude prices for the foreseeable future. However, the business intends to raise its investments in specific properties, including those in the Permian Basin, other unconventional plays, and the Gulf of Mexico. Chevron put a lot of money into the Permian Basin before the coronavirus outbreak and the drop in oil prices. Last year, it also discovered acquisition options. Chevron said in July that it will purchase oil and gas producer Noble Energy in an all-stock deal worth $5 billion. Noble controls 92,000 acres in the oil-rich Permian's Delaware Basin. While rising oil prices help Chevron's upstream drilling operations, higher oil prices mean lower margins for Chevron's downstream refining activities. Chevron is one of the oil majors with Gulf Coast refining operations that needs heavy crude to run smoothly. Refiners' input costs have surged as a result of the sanctions on Venezuelan crude, compressing profits. So, should you buy or sell Chevron stock? If you're considering into this integrated energy behemoth with a large 5.8% dividend yield, here are some crucial considerations to keep in mind. Number 1. Financially strong. Chevron's balance sheet is one area where the company shines well. Despite the fact that the company has yet to complete its annual report, it concluded the third quarter with the lowest debt-to-equity ratio in its peer group, around 0.26 times. ExxonMobil, NYSE, XOM, was the closest competitor, with a ratio of 0.39 times. The important thing to note here is that the two companies actually switched places. Exxon used to have the best debt-to-equity ratio, but the 2020 energy market crisis drastically affected that due to the company's aggressive capital investment plans. To be honest, neither business is in a horrible financial position, but Chevron simply has more flexibility on its balance sheet if conditions continue to be difficult. This is advantageous for a number of reasons. The company may maintain its dividend and capital investment goals while also taking advantage of external opportunities. Number 2. Leaning in. That gets us to the second point. Chevron bought Noble Drilling during the slump. The deal was valued around $13 billion in total, including nearly $8 billion in debt. Chevron's balance sheet strength allowed it to take on this contract during a slump in the industry. But the true story here is how the oil giant took advantage of the exceptional crisis to bolster its long-term position in the sector. There is, however, another significant issue to consider. Chevron attempted to purchase Anadarko Petroleum in late 2019, but was outbid by Occidental Petroleum. When the price became too expensive, Chevron walked away. Although the acquisition was badly timed for Occidental, it demonstrated Chevron's disciplined strategy by not engaging in a bidding war. To put it another way, investors should be fairly certain that Chevron did not overextend itself with Noble. Number 3. Modest spending. In addition to these facts, Chevron was able to reduce its capital investment projections for 2020 significantly. The ultimate tally was 35% lower than the previous year's total. However, the $13 billion invested by the energy firm fell short of the corporation's updated pandemic forecasts of $14 billion. As a result, the company was able to quickly adapt to the changing industry. Exxon spent $21 billion in contrast. Despite the cutback in investment, Chevron's output increased by 1% in 2020, thanks to the Noble acquisition. Exxon's production, on the other hand, has decreased by nearly 5%. Chevron is finding a means to maintain growing its company amid industry headwinds and reduced expenditures, while its closest counterpart on the balance sheet is barely scraping by. Number 4. Still a rough market. All of this wonderful news, however, must be balanced against the most glaring disadvantage. Despite the fact that oil prices have been steadily rising since early 2021, the situation is far from normal. To put that in perspective, Chevron recorded an adjusted loss of $0.01 per share in the fourth quarter of 2020, and an adjusted loss of 20 cents per share for the entire year. However, when one-time events such as the $4.5 billion write-down are factored in, the full-year loss is a crushing $2.96 per share. In 2019, Chevron took a greater one-time charge of $8.7 billion, but rising oil prices more than offset the loss, resulting in a $1.54 per share profit. The higher oil prices we've seen thus far in 2021 will help to improve earnings, but Chevron's break-even point is $55 a barrel, according to the company. That's a low number in comparison to rivals, but it means that oil must stay in the present level. It recently surpassed $60 a barrel, or 2021 will be another challenging year for Chevron. The issue is that the global pandemic's trajectory is unknown. For the time being, it appears that oil stockpiles are declining and demand is gradually returning, But these dynamics might rapidly shift in the negative if additional forms of the unique ailment emerge. When you take a step back and consider the broader picture, Chevron is perhaps the best positioned oil business today, thanks to its strong financial position, modest spending needs, and ability to leverage the downturn to strengthen its industry position. Given the current state of uncertainty, investors interested in the energy sector should be pleased with what they find. While you wait for the sector to recover, you may take advantage of a strong 5.8% dividend yield backed by over 30 years of annual dividend growth. Do you think it's a good idea to put $1,000 into Chevron Corporation right now? Our award-winning research team recently released its list of the top 10 companies for investors to buy right now. And Chevron Corporation was not one of them. Motley Fool Stock Advisor, an online investing service they've been running for nearly 2 decades, has outperformed the stock market by more than 4x. And they believe there are 10 equities that are better buys right now. What are your thoughts on our video? Please let us know in the comment section below. If you enjoyed this video and would like to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.